Ever feel like you're missing the secret code to how pro traders make decisions? Like, what are they seeing that we're not?
Well, that's what this deep dive is all about. We're breaking down a YouTube video from the Inner Circle Trader. It's a play-by-play of a NASDAQ futures trade from March 2022. And before you think, oh, futures trading, not for me, hold on. This isn't about turning us into day traders overnight.
Yeah, it's more about the mindset. This trader, he doesn't just show the win, he explains his thinking every step of the way, even the doubts he has.
Exactly, and that's gold. So he starts off looking at this daily chart of the NASDAQ futures, March 2022 contract specifically, setting the scene kind of before things get wild.
And he keeps mentioning this imbalance he sees on the chart, like it's the hidden signal most folks would just glance over.
So what's he picking up on? Is this like a technical analysis thing? It's about order flow, who's placing big buy or sell orders. He's seeing footprints, basically, of the big players.
Ah, so it's not just the price, it's how it's moving that tells a story.
100%. And with this imbalance, he starts using these words. Premium, discount, gap. It's how he's describing the forces at work.
Okay, hold on. Break that down for me. What do those terms even mean in this context?
Think of it like an auction, right? Premium means buyers are really hyped, pushing the price higher than expected. Discount is the opposite. Sellers are desperate, driving it down. The gap, that's the space between where he thinks things could go haywire.
So he's sensing an opportunity, but it's still early. This is where he starts zooming in, yeah? Like he pulls up an hourly chart, then a 5-minute, then even a 3-minute chart. Why the close-up?
Confirmation. See, he's already leaning towards a market drop. He's bearish in trader lingo, but he needs proof, not just a hunch. Each time frame adds detail, helps him find the perfect entry point.
Like he's putting together a puzzle, getting sharper focus each time, but then he does something that confused me. He mentions TWO opening prices. The midnight one, sure, but also the 8:30 a.m. EST open. What gives? Why both?
Because both matter. Midnight kicks off the 24-hour cycle globally, but 8:30 a.m. EST, that's when the U.S. wakes up and things really get moving.
Two different moods, like before and after the coffee kicks in for the market.
Exactly. And with that in mind, let's see what he does on that 3-minute chart. He uses the terms fake rally and swing highs, and that's
Yeah.
where things get interesting.
All right, so fake rally, swing highs. Sounds kind of like Wall Street jargon to me.
Yeah, but they're actually pretty descriptive once you get out.
All right, hit me.
So fake rally, that's the market playing tricks. It's that little upward burst that makes people think, oh, things are turning around. But it's really just setting them up for a drop.
A classic bull trap.
Exactly. And the swing highs, those are the temporary peaks during that fake rally, each one a little lower than the last.
So he's spotting a pattern like the upward momentum is dying down.
Exactly. It's like he can read the chart's mind or something. But here's the thing. Later on, he admits he was feeling antsy, wanted to jump back into the market after this win, even mentions using demo trading to cool off.
Really?
Yeah.
Why? You'd think a win would boost your confidence, not make you doubt yourself.
It's trading psychology, man. Emotions can mess you up even when you have a system. Using demo trading after a win. That's smart. It's like scratching the trading itch without betting the farm after you already hit it big.
A way to stay grounded, almost like a mental reset. There's this other line he drops that really got me thinking. He says, you don't want to push your edge, you sharpen it.
That's a good one.
Yeah, what's he getting at there?
Discipline over greed. So many new traders, they think they got to be in on every trade to win big. But this guy, he's saying chill out, be patient, wait for the perfect setup, one that really fits your strategy.
So you become more selective, almost like you're refining your instincts.
Exactly. You're not spreading yourself thin. You're making every move count.
So after all that, did it pay off? Did he make bank?
He did. Pulled in like $4,920 on that single trade.
Wow.
But he's quick to point out it wasn't a sure thing. He even mentions taking a small loss earlier that day.
So it's not about being right every time. It's about sticking to the plan.
100%. And get this, he mentions this was a live account, not just a demo.
So he actually put his money where his mouth is. That's impressive.
Right. But now you might be thinking, this is all good for these Wall Street guys, but what about the rest of us?
I mean, most of us aren't trading futures contracts, right?
True, but that's the cool part. These deep dives, we're not just looking at the what, but the how. And that translates.
So what's the big takeaway here? What can we all learn from this trader, even if we're not in finance?
It's the analysis, man. He's not just clicking buttons. He's thinking 3 steps ahead, managing risk, knowing himself.
Being intentional, like you said before.
100%. Think about it, whatever decision you're wrestling with right now.
Oh, I feel that. There's a few.
Right. But what if you approached it like this, trader? Map out the scenarios, check your own biases, know when to walk away.
That's kind of powerful, actually. It's like we can all be better decision makers, not just in trading, but in life.
That's the goal, right? To learn and grow.
Exactly. And on that note, we've reached the end of our deep dive for today. But like you said, the learning doesn't stop here. So until next time, keep exploring, keep asking those why questions, and we'll catch you on the next deep dive.